Hi, everyone. Welcome to the Startup Investor Accelerator program that we're doing about angel investing and early new startups. This is part of a regular workshop series that we do. Let me dive in a little bit and introduce myself. I'm John Seacrest. I'm the founder of the Seattle Angel Conference, which is an example of a way of doing angel training, learning by doing program that we've been running now for, this is the 13th year. But I started doing the Willamette Angel Conference in 2007. So we've had a little bit of practice on growing new angels and at the same time helping startups figure out what they're doing. It's a 3-month program. So Seattle Angel Conference is running starting next week with our deadline for companies. And we've expanded because of COVID and going virtual to the Startup Investor Accelerator, which is focused primarily on Europe and European stuff as well. We do have a motion to do an Asian version, so there's been some discussion in that direction as well. But at the very beginning, if we look at investing in stocks, you can keep walking down from the large cap stocks to the small cap stocks down to the micro stocks. You just keep going, and eventually you get to the point where many of the people in the room seem to be, where they're thinking about, I'm going to grow a company and I see I need to grow faster than my revenue is going to support me. So then how do I do that? And we can help understand that by exploring the process of raising funds. So we do that twice a year for Seattle Angel Conference, and then twice a year for the Startup Investor Accelerator program, the Transatlantic Angel Conference. So the deadline for Seattle is next Tuesday. We will do a meet the funders meeting tonight in Seattle time. And Astrid is our point person in Europe. And so Astrid, you want to tell us a little bit more about Seattle Startup Investor Accelerator, please?
Of course. Thank you so much. Thank you, John, for passing it and getting started. Thanks, everyone, for joining here. I'll start maybe with the mission. As you all know, and probably don't even know, angel investors play a very big and important role, not only in the startup's life, but also in the overall economic development and in the livelihood of our innovation economy's growth. Angel investors support new startups grow, become a connection point between corporate or more established industries and the newbie startups, and also create a lot of work opportunities and further support to the ecosystem. Because of that, it's very important to grow new angel investors. And at the same time, there are many individuals around the world that want to start investing in startups, but due to the challenges and difficulties in understanding the startup cultures or differentiating some startups from others in terms of their investability level, a training program has come to place that John has started. So taking that same challenge of new people wanting to become investors, we have noticed the notion also in Europe and brought the program to Europe. This is the Startup Investor Accelerator is basically the copy program of Seattle Angel Conference, which in its geographical location is different that in the sense that includes investors and startups from all over the world, bringing them all together. We are aiming at maybe bringing angel investor communities together and at the same time building broader perspective for new investors to understand how global investment trends are moving and how to invest globally at the same time. We're also working with startups internationally, and this is where the difference between Startup Investor Accelerator and Seattle Angel Conference come into place. John, back to you, or should I move forward?
Yeah, okay. Move on to Sophia.
Sounds good. So today we actually have 3 of Startup Investor Accelerator angel investors with us. We have had angel investors joining to the program from United States and from Europe. And I think today's speakers not only are iconic due to their profiles, but also their geographical location and origin. So we have angel investors that have been actually both in US program only and in the transatlantic. And they are also with European origin living in the US or US origin living in Europe. So this is also an interesting international mix of profiles. Sophia is the lead investor for our upcoming Transatlantic 5 program, and she'll also be today's moderator. Sophia?
Thank you, Ashkik. So indeed, I think before just going into the introductions, I would like to share the theme for today and where we're going to get in a deeper understanding of what SIA is and what the Transatlantic is, Transatlantic Conference is. Can you all see my screen?
Yes, looks good.
All right. So today, my name is Sofia Cristina Vichan. I'm along with Cyril Glockner and Matteo Costa. We all share our experience with the Startup Investor Accelerator, and we all have different backgrounds, coming from different countries. I am born in Romania. I lived for 13 years in France as well, and I just celebrated 2 days ago 7 years since I moved to the United States. So I kind of have this 3 cultures in my DNA, where I have a dear attachment to European companies, and I'm trying to support them ramp up, even if I'm based in the United States. But I'm also trying to learn more about what venture capitals and angel investors are doing on a market that is more mature and I think more educated about how to manage investments and how to support startups. I have 15 years of background in cybersecurity, where I worked for 2 large corporations on programs and projects that dealt with either device, hardware security or software security, and decided a couple of months ago to focus more on entrepreneurial projects. Last year, I started to look into angel investing, and I have now 2 companies that I invested in, and I'm happy to be the lead investor for the upcoming Transatlantic Angel Conference. At the same time, I am the executive director for the French-American Chamber of Commerce here in the Pacific Northwest, where I also want to support the development of French companies and help them to scale up on the US market. So these 2 missions kind of complement each other very nicely. And I think it's part of a broader mission to try to foster this partnership between Europe and the US, as I think my culture and experience can very much help it. Just education-wise, I'm an engineer, but I also have an MBA from Paris with Sciences Po, École des Mines and Collège des Ingénieurs. And with that, I will pass it on to Cyril from Switzerland.
Thank you, Sophia. Well, I'm in France right now. I am at a conference this week, so I'm joining remotely, but I'm still in Europe. I've been working in the technology sector for more than 25 years in large and small companies. On the larger side, certainly Microsoft. On the smaller side, startups like Bonsai. That was an artificial intelligence startup out of Berkeley, California. I lived in the US for almost 20 years and recently relocated to Switzerland. To kind of, I would say, reconnect a little bit with my European background, but also try to see what I can do here with the local startup ecosystem. As mentioned, I worked in technology for a long time, mostly in kind of new products and kind of newly developed products or newly developed product areas. Most recently in AI and machine learning. I did a fair amount of product work, partnerships, strategic partnerships, and so on. I'm an angel investor active in SAC. I was active in SAC when I was living in Seattle, in the Seattle Angel Conference that John referred to, and in the recent Transatlantic Conference in Tech 4, and forward looking into Tech 5. I'm also advising startups here, mostly regionally in Switzerland, but also some in the Bay Area. And finally, I'm the SIA lead for Switzerland. So the Startup Investor Accelerator program is something that and we will talk about that more, we want to bring to other regions and other countries. And one of the next locations, hopefully, is Switzerland. By the way, at that point, I also want to welcome the people from my Zurich meetup. Mark, I know you're here. You introduce yourself. I don't know who else is here, so please make yourself visible in the chat.
I was muted. Thank you, Cyril, and everyone else who introduced themselves. My name is Matteo Costa. I am originally Italian, so I have a similar international journey and background like Cyril and Sophia. I spent there most of my life before moving to Spain, where I got my MBA from ESA Business School. And I was working on writing on international projects when I was in consulting at Accenture. While I was in business school, I co-founded a company. I bootstrapped it with other actually Accenture coworkers. That's when I started venturing in the world of startups and early stage companies. But then when I moved to the US 6 years ago, I've been working in corporate media, specifically book publishing, covering business development and marketing roles. And in the past 2 years, while I was in corporate, I was working very closely to innovation. So I was running the internal accelerator. I was launching new business line, partnering with startups. And so the startup ecosystem has always came back. And so 2 years ago, I decided that, I wanted to venture into the world of angel investing. And I honestly didn't know where to start. And I thought the Startup Investor Accelerator with TAT was a great place to start. So I attended 2 editions of the program, 2 cohorts, the second one as a lead investor, which I'm happy to share more about. And then I'm continuing this journey of supporting early stage startups however I can with money or brain capital, because I think it's a very, very important mission to keep furthering in the society.
Thank you so much, Cyril and Matteo, for the introductions. With that, we'll dive into sharing with you in more detail what the Startup Investor Accelerator is. And just before diving into this, just the basics on what angel investing is. For those who are new to this area and who are here to learn, we'll start with the basics. So just in a nutshell, obviously, startups are here to create future jobs and value and move the economy forward and drive innovation and trying to improve things and trying to build products that would satisfy future customers. That goes hand in hand with the need for them to actually be supported from beyond their very inner circle of friends and family, investors that could be there in the long run to believe in the vision, to support them to actually scale and have satisfied customers for their products and services. So they all go hand in hand, the need for innovation, but also the need to support that innovation. And it's when we're talking about an investor incubator, the mission that we have is to make sure that for the startups, we're providing them enough feedback for them to learn about how they can improve their product, how they can improve their business, how they can get access to more resources, including additional funding. And then on the other side, for the investors, what we want is to make sure that people who are very new to this area learn about what are the responsibilities, what are the benefits of being an angel investor, collaborate with other angel investors that maybe have more experience, learn from those that have more knowledge, and then improve that over time, right? Repeat. And therefore, it kind of creates this synergy that over time builds better startups and better investors. Where do angel investors position themselves? Because I think a lot of you have heard maybe about, venture capitals or maybe private equity. And for some of you, all this vocabulary might be pretty new. What is the difference between an angel investor and a VC and a private equity? This graph that I'm sharing here on the screen comes from a very good research, which I recommend for any new angel investor. It's called the Swiss Angel Investor Handbook, and it's provided by SICTIC, which is a group of angel investors from Switzerland. So if you want to try to Google that up, you can download their copy for free. And you can learn more about angel investing. It's a very good resource. I like this graph because it positions clearly, you can visualize where angel investors are in the life cycle of a startup. And think about the fact that when 2 innovators or one team of innovators has an idea, they're going to try and build it all together, but at some point they're going to need more funding. So they're going to go to family and friends, and they're just very close circle. After that, and at that point, you know, their budget might be less than maybe even $100,000 or something like that. At some point, they will want to grow that, right? And that's where angel investors come into play. We talk about that company being more in a pre-seed or a seed stage, and angel investors can help with bringing more capital so that the activity, whether that's economical or research, for the company can develop. And then past that, when we're talking about a company valuation that goes beyond $1.5 million, we can think about more of a Series A. And that's where we're looking more into Series A funds or corporate ventures or even family offices. And then further on, as we grow, we're getting more into VCs and private equity proportionally with the value of the company as it grows and as it builds value. So we as angel investors, we are there to support companies who have a product or have a path to drive a product to be scalable, but they're not yet as big, you know, to consider themselves as a Series A or B or C. So we're right in there in between, like the family circle and more of Series A funds. So this gives you an idea about what is the size of the companies that we deal with as we select them to be part of the program that we manage with SIA. Why are we important? Well, a lot of the times the startups that come to look for funding from angel investors, they do that because they might want to create new jobs, or they might want to develop better marketing campaigns, or they want to do better research and move their research from kind of an incubation stage to a critical stage where they could actually deliver their product on the market. And we are critical in allowing them to move forward. Also, it is important to have this funding so that they can for sure have a strategy to attract talent and have continuity, and develop more of their expertise in a certain area, or collaborate with other companies. I have some examples of one company that was in a past program that even if, you know, they didn't get the funding, but because they were part of the program, they started to collaborate with another startup just thanks to that. So sometimes angel investors are creating that link between all the companies that they might be in touch with, because we're very much exposed to a portfolio of companies. Angel investors come from all sorts of backgrounds, and I think that is key to show diversity as we interact with different companies. Every angel investor comes with their own added value to a startup. And every angel investor brings their own network. So it's kind of an opportunity to have this exponential growth for a company that up until meeting the angel investors would be very much working in a silo, or very much focused on their own mission and their own product. All of a sudden, when interacting with angel investors, they actually get to meet a new network, new skills, new opportunities, new partners, and even new customers, and more opportunities for financial flow, so that they can upscale, so that they can move forward as they innovate and as they create value. From an angel investor, putting money into a startup comes with the magic and the dream of having a high return on their investment. Because we come that early in that cycle that I showed you earlier, there is a high chance that we might actually get a very high return on our investment, because at that point there are very few investors, and so if the company, it's very easy, it's very accessible to actually get shares in a company at that point. So it is for those who are looking to be more intellectually challenged. All of the startups are trying to create solutions to real problems. And so a lot of the times we're exposed to latest news, latest technologies, and that is quite stimulating if you're looking to do something more of an intellectual work and be exposed to the latest research results and latest news in a certain area. To some extent, angel investing also comes as a reassurance when you're looking to have more of a diversified portfolio. Let's say you are already successful in having a savings bank account, and then past that, maybe you have like a 401k or a private pension plan, or maybe you have some money invested in real estate, or some in even stock market. Well, think about angel investing as being an additional way for you to have some long-term gain. And that is, a good opportunity when you're looking into investing in startups. It's not going to be something that you're going to get return on in the next 1 or 2 years, but you can diversify your portfolio in the long run. And then last but not the least, it's about the fact that you can mentor other angel investors, you can mentor startups, and you can network. You can just expand your network of connections, whether that is in a certain area or geography, or just for the fun of learning something new. It all also comes with risks, and this is something kind of a full disclosure here. There is a chance for high return on potential, but there is also a high failure rate. And the numbers are debatable depending on which country you're in and which industry you're investing. But some people say that 1 out of 3 companies is actually successful when you invest. Maybe the rate is even lower, the rate of success, right? So there is a huge risk of actually not getting any return on your investment. But there are stories also of people who only made it for 1 company out of 20, but that company went from, an investment of 500,000, let's say, to $5 billion for the group of angels. So full disclosure here, there is a high failure rate as well, which is why we'll talk about it later. It's important to have really good due diligence executed when you're looking into investing. There might be liquidity challenges, like not everybody has access to put some cash into a company. It requires, obviously, to have that availability and that flexibility. There is market volatility, and one industry, or there are risks that are not in your control as an angel investor. That could be triggered by geopolitics, by economics, by things that are just out of your control, just with any type of other investment. And then there might be a risk of lacking information. And I think a good angel investor should always be curious about the world around. And it's not just about reading the news but going past that level of basic knowledge. So there are opportunities, but there are risks, and the good angel investor should be aware of both. Now, how do we mitigate those risks? As I said, and you'll hear more about it, there is a step in the investment process which requires to be focused on a due diligence report for the company you're thinking about investing in. And that covers multiple aspects of your potential startup to invest in. It could be looking into their economics, looking into their marketing plan, their overall strategy, the product, the team, how well they collaborate with each other. And before doing that, it is important for an angel investor to actually think about what is important for them and what is the key factor in making a decision whether an angel investor wants to put some money in a startup or not. We call that a thesis, right? Like, what is your credo and what do you think brings meaning to your investment? Is it, are you investing rather in a product or in the team or in their business? So these are just examples of investment thesis. Now, as an investor, we should always think about not just one investment at a time, but at each new investment, consider that in the bigger picture. Personally, for example, I invested in an aviation company and then in a food and beverages company. Like, these two have nothing to do with each other, and they're in different geographies. They're at different stages in their life cycle. But for me, it allows me to actually have diversity in my portfolio. And a good angel investor needs to think about not putting all the eggs in the same basket, right? Like, if all of a sudden, like, the aviation industry goes bad, or if the food and beverages industry kind of gets shocked by some tremendous changes, I don't know, on due to the supply chain or something, like, it shouldn't impact your investment. So it's important to have a very diverse portfolio. Sometimes it's better to do smaller checks in more companies. and go small and broad versus like putting a lot of money in one startup and then having nothing left to deal with maybe other industries or sectors. So this is kind of just a best practice on, you know, how to invest, especially when you start. And then the key thing is to continuously collaborate with other angel investors, be curious, ask questions, and yeah, make sure that you're not reinventing the wheel. We've all been through a similar path. And I think the beauty of angel investors is that we have a big community that we can rely on. Part of the benefits of doing the Startup Investor Accelerator program and also the Transatlantic Angel Conference we're going to talk about in a minute is that it comes at the graduation with a membership of different business angel networks, like the European Business Angel Network, or also the American Angel Investors Association. So these are kind of, you know, this is kind of the big picture when it comes to a general term of angel investing. And I will pause for a little bit before passing it on to Cyril. I would like to know if there are any questions.
There are a bunch of questions in the chat, Sophia.
Okay.
Anita was asking about what kind of MVP needs to be available.
So what kind of minimum viable product?
Yeah.
Yes, or how much do you need as a minimum requirement? Like, for example, customer traction, you know, what do you count as an MVP or alternatively as customer traction to kind of signify that there is already a little bit success with that product?
So I can give my opinion about this, and then maybe Cyril and Matteo, I think, and even John, like if you want to chime in. I think it depends on the industry we're talking about. We see in some industries, it's kind of easy to do an MVP and to already have market feedback and already have awareness on what we call like the market fit. Like if it's kind of a food and beverage industry, it doesn't require extensive research of years and years and millions of dollars of investment for the most part, right? As soon as you have like a focus group of users who already tested your product and you already have feedback from the market and you already have a way to scale, that's good enough, right? And even if you don't have a way to scale, but you already have like some feedback from the market that your product has a way to move forward, that's good enough. But there's at the opposite end of it, we see medical or life sciences, biotechnology startups that are working, for example, on creating cancer diagnostics technologies or, you know, things that would require maybe more years of research. There, it's a little bit harder to say the minimum viable product is when they have a patent, or like sometimes it's good to know that they have a path to secure their research and that they have a plan to add value to the future company, maybe through patents or just collaborations with some major players. But yeah, I think the short answer to the longer version of it is it depends on the industry. And as soon as I think there is proof that, you know, it can add value to a customer, then we have a product. It needs to prove that there is a value for the customer and that it solves a real customer problem. It's my opinion, but I'm sure Cyril, Matteo, John.
Well, I think there's a lot true. You said a lot of very meaningful things, so I don't want to repeat what you said because I think I totally agree with all of what you said. However, I would like to add one kind of different direction on the question, and that is, it depends on what the investor is looking for. Assuming that you are pitching to angel investors or to, like, even if you pitch to your friends and family or to your wealthy uncle, it depends on what their investment thesis looks like. And that is a spread. So somebody can say, I invest into anything that is a great idea in a specific industry. Another person might say, I only invest into something where I have a proven where you can show me sales. Bring me your first 10 customers with a proven sales record. I'm not investing otherwise. So the spread of kind of what investors believe is investable is different. It's not always the same. There's certainly kind of a sweet spot where there has to be some evidence and some customer action and some feedback and some signal that you actually create value. So you're solving a problem for a certain audience. That is typically a sweet spot that you see in investors. But we have seen in the programs, I would say, a huge diversity from ideas what an investment thesis could look like, and that is certainly true for what the MVP has to be for that investor group.
Very helpful. Thank you so much.
Thank you. Matteo, do you want to add your comment to this?
Not really, meaning that I would, as Cyril said, would be repetitive. The way I see an MVP, piggybacking on what John said in the comments, is sometimes the MVP is the way to get customer feedback or to have, again, a minimum viable product to prove that the service or the product is what customers want. You know, it can start from surveys before you even go build anything. To your point, Sophia, like sometimes it is easier or sometimes it is harder to build an MVP depending on the industry that you're in. But at the end of the day, it is that early signal of whether customers are willing to pay for what your company is offering. So that's the way I would think about the MVP.
Thank you, Matteo. I see Stephen asked about the type of investments, whether we're looking rather in technology or if there is room for other types of companies. And I would say there's definitely room for a broad spectrum of companies. In the past, we invested, as I said, in food and industry companies, but also cancer diagnostic company or aviation, or there were companies who were coming up with some innovation, for example, in the textile industry. There's plenty of opportunities, and I think there's still plenty of innovation that can happen in any area. So we're pretty open on that. And I think I kind of addressed all of the questions that were in the chat. If there's anything else for the moment, yeah, let us know. You can raise your hand.
Yes, I have another one.
Okay.
I wanted to ask, what's the best approach on when to start sharing the idea or reaching out to investors, as in like before a company is founded or okay, hold on, sharing my video. Hi. So before a company is founded or formed, or after, so once the company has been formed, and then once obviously business plan has been created and you have obviously a pitch deck and so on, I understand that, but it's more the crucial aspect or the crucial question is the legal side of things. I kind of imagine in my head that one of the concerns could be to share too much detail and to share too much information, and the concern that the idea might be stolen. I know that I've heard a lot that it's ridiculous, but the concern for any new beginner is there.
Matteo, I see you want to take this one.
Yeah, I'm happy to jump in. Aneta, I'm a big believer that execution is way more important than idea. So you can have the best idea and not being able to execute on it. So right. I wouldn't worry too much. I mean, I have come across some founders that are like, oh, you know, I have an idea, but you should have to sign an NDA. And I'm like, that's already not a red flag, but maybe an orange flag, because at the end of the day, you should be as open as possible to gather feedback, inputs, and not be scared about your ideas being taken away, because anybody can do it at any time. And again, as I said, execution is more important. What I would say is, obviously, investors tend to look at ideas that are not just in the conceptual phase, but are a little bit more articulated. So the fact, whether it's in the form of a pitch deck or anything else, you've done your homework, you've done your research, you've talked to some customers, as we just said, maybe not the MVP stage, but like at least show that there's an appetite for the idea or the product. And yeah, I mean, I think investors are always open to kind of like look at those ideas, so long as, you know, the founder presents itself as a, you know, as a legitimate founder that has done its work.
Thank you. Very helpful.
What I would like to add here, and it's just a small comment, imagine yourself, you're pitching in front of an audience in some sort of a startup contest. where there's like 100 people in the room, 20 startups are pitching. Like you might end up in a situation where there's no protection whatsoever on the idea that you are pitching. So I would rather start from there on and say, what is my intellectual property that is really protectable? And think about that a little bit more long-term. When you're that early, I would say it's harder for you to convince other people that your idea is great than that somebody will, like the risk is, it's much more difficult to convince other people than you need to protect your idea and try to kind of keep that close to you, and then nobody's willing to invest into your business. When you go to the US West Coast, and I forgot where you're located, but if you think about like Silicon Valley and the Bay Area, typically ideas are kind of everywhere. Like people have ideas all day long. They might not understand the problems well enough. So ideas are cheap, problems are valuable and expensive, and then it's about execution. So it's about you and your ability to get to that value by solving the problem. Usually also, everybody has the same ideas. Like it's not that you have a unique idea that it's only you. We have like, I think close to 9 billion people on the planet. There will be others that have these ideas too. It's about how do you solve that problem that is related to that idea, and that goes back to the execution part.
And if I may add, I think it depends also on what type of investor you're addressing, because there are, depending on which country you're in or what industry you're in. I'm going to give you an example. In France, there are grants which are non-reimbursable that the state provides for universities to develop research around a certain problem. And that doesn't require for the product to even exist. They're called like incubation or maturation kind of funds, right? So it depends on what investor you're talking to. There are investors who are looking into maturing an idea without expecting that to necessarily have a product, right? So it's good to know the reach spectrum of investors that are out there, and to know how to come across for them and what to expect from each type of investor. Here in the angel investor group that we're in, we're rather looking at companies who, for the most part, maybe they have a team or they already have a very clear statement of the customer problem that they're trying to solve. And they show a path forward, and maybe even a path to have a healthy cash flow and a healthy business, right? So I think we are past the stage of just having an idea without having thought through more of the details on how to turn it into a product or a service.
Yeah, okay. Thank you.
Anything else you'd like to add, John?
No, I think you covered it pretty well. For the most part, well, actually, yes, there is something I would add, which is maybe on the screen. So when people are investing, sometimes people are investing on the basis of mission and belief in the people rather than evidence of the business. And so there's at the beginning faith capital, where people are investing in the idea and the people and the fact that the world will be better because of this idea, independent of how far they've gotten with the customer problem fit, independent of how far they've gotten with the technology. And then the more you get to Series A, the more that you're getting to the financials have to make sense, the business has to be executing, the foundations have to be in place, the growth has to be in place. And that's the journey for angel investors, from faith capital on one side to financial investment on the other side, with risk capital being in the middle. And the angel group that we're talking about, the Seattle Angel Conference and the Startup Investor Accelerator, is in that beginning part of risk capital, where we want to see engagement with the problem, with the customer. We want to see foundations of the business in play. We care about the mission at some level, but we care that you're getting to a financial model that's going to be functionally investable later.
Thank you, John. With that, I'll hand it over to Cyril to tell us more about the Transatlantic Angel Conference, which is a program built by the Startup Investor Accelerator. Cyril, it's all yours.
Thank you. I want to start with talking a few seconds about our kind of terminology here, because can you go back to the first slide? Sorry, Sophia. So there are like 3 acronyms that you're hearing and that we are using. And we are starting with SIA. This is Startup Investor Accelerator. So what that means is we are accelerating the journey for a startup investor, right? That's the kind of umbrella term for what John's program is all about. Accelerating the journey for a startup investor, SIA. SIA runs 2 programs or more. Like currently there are 2, I think, John, correct me. There are 2 active programs. The one program is the Seattle Angel Conference. That is John's oldest program that is still active. We also have the acronym SAC, SAC for that. That is a US West Coast based investor education and investment program. And then secondly, we are running the Transatlantic Angel Conference, which is a newer program that John has introduced with the help of Astrid and us into the European market, where there is a connection between the US West Coast and European investors. Just as a quick summary to sort these things out, right? See on top and then 2 programs. Sophia, next slide, please. Quick on the history. John, who you met, has started all of this in 2006 in Portland, Oregon, in the US West Coast, in the Pacific Northwest, where he created the first programs with the idea to do economic development. How do you grow the local economy? And what are kind of the growth aspects of an economy? And I think in hindsight, an obvious kind of choice there is to say, we need new companies, we need high-tech companies, we need to build the future. So you're saying, okay, how do we as kind of get into that kind of future state and grow the local economy? Which then immediately means you need startups, right? You need new companies, which equals startups. What do startups need to grow fast and to be established? It's capital. Where is capital coming from? From the investors. So to do economic development in an area, a thesis here is to say, we need more startups. To get more startups, we need more investors. What does that mean? We need to bring more investors into the fold. So we need to educate them and grow the base of angel investors, because they are the investors that go early on with a high level of risk into investing into new companies. Then John moved all of that to Seattle. That's where the Seattle Angel Conference started. I don't want to belay the history too much. You can ask John questions if you're very interested in that. I personally did 4 rounds, let's say 4 cohorts of investments with the Seattle Angel Conference. That's already a few years back when I was still living in Seattle. And now John has moved the program basically across the globe. There are explorations in all sorts of other states, like Alaska in the US, but also completely different continents like Africa and certainly Europe, what we are talking about here. And the latest, I think, regions are Barcelona. That's where Astrid came into play, where the Transatlantic Conference of running from, or it's organized from. And then lastly, you hear also Mossy Ventures as a name. That's the organization, the company that John is owning. So that's the kind of complete umbrella. Next slide, please. Just quick to the numbers. I think I mentioned some of that. We have Seattle Angel Conference has already done 24 cohorts. The 25th is starting in February 2024, so actually right now in this month. And then we have tech program under the SIA umbrella that has been done 4 times, and Tech 5 is going to start in March. So it's a little bit out, but if you're interested in either on the startup side joining or on the investor side joining, this is getting close, right? We only have a few weeks left to get things started. Next slide, please. Quick recap. This is like the impact. So that's the impact the programs have done in their lifetime. In together, there were 29 rounds of the program itself that run. 50 investments have been done. More than almost 700 investors have participated and went through the program. Some of them repeat, some of them many times actually. Overall 1,900, so almost 2,000 startups have participated. We talk about that a little bit more in a second. And overall $5 million have been raised in the program across these cohorts. So investor money pooled per cohort, and then across the cohorts, that is about 5 million. And then what's interesting is that the alumni that come out of the program, so that the investors that were starting their investment kind of journey or investor journey, that once they are out of the program, they keep being investors. Not all of them, but some of them. And they keep also investing into startups. So they're active angel investors. It's one thing we probably should talk about later a little bit more is how does an investment look like that you have done first in a startup and then you do a second investment into the same startup when they continue to raise capital? Because that's something that you also need to kind of pay attention to on the investor side. This is not a one-time, one check you write for one startup. That same startup in, let's say, 18 months later will come back and needs more capital because they need to grow faster, need to hire more people, do some marketing and so on. So they have capital needs. So they want to raise subsequent rounds. And they're typically looking into their existing investors for that. Next slide, please. I briefly talked about this, just the visual. We are going global. So from a European perspective, these are the areas that we are currently investing in. You see there Barcelona with the red dot, and the yellow one is Zurich, where I'm located. These are the most active ones, but we are also exploring London, and we are exploring Milan as potentially a next station, and we are still working in Lisbon. Next slide, please. So now I actually have only invested into Tag 4, which is Tilden, the company logo on the right side, on the very right, which is a non-alcoholic beverage company. I have to ask Matteo and Sophia to talk about the three others, please.
I can talk about the one next to it, which is Evitado.
Go ahead.
It's a company from Hamburg, from Germany. They do collision detection devices on the ground for airplanes. And we've worked with Evitado in the Transatlantic Conference number 3. So I was part of their due diligence team, looking at their financials and looking at their ability to scale moving forward. They have been growing and signing contracts now, not just to drive development, but they have like real customers now, and they work with a number of military players in Europe and outside of Europe, as well as with airports. And so at this point, I think their valuation goes beyond a couple of million. And so we're looking forward to see what's going to happen next. The beauty when we invest as an angel investor is that not only we put some money, we're not just a bank. For Evitado, I'm actually gonna do some business development for them. And we're working on trying to develop partnerships, more partnerships in the Washington state, for example, with some of the aerospace players here. And this is, I think, one of the best benefits that you have when you act as an angel investor, that not only you have credibility because you support them financially, but you have credibility by bringing your skills, your knowledge, your network to help them grow their business. And you're in touch with their C-level people. And I think that is very fulfilling and very rewarding. So one of the other great reasons why to be an angel investor. Thank you.
And I can talk about the first two companies being the winners of Tag 1 and Tag 2. Luana, or Luana Foods, is a company that focuses on creating a plant-based product, specifically fish, sashimi, to reduce the consumption of ocean fish. They started as an alternative food company, if you wish, and then they've been gradually moving into the food tech. They're trying to patent their technology to be used in other spaces, food spaces, obviously. So they're trying to scale and branch out from just like one single product. And S-Lab instead is a company that grows biodegradable packaging from both hemp and mycelium. Mycelium is basically the connective tissue of mushrooms. And their goal is basically to replace plastic and styrofoam. And the way they do it is to, with their own production line, is that they create molds. They already have kind of like tests and product development with L'Oreal. So for example, in the cosmetic space, and they create molds for their products to package their product, and the packaging is entirely biodegradable.
And they're both still alive, right, Matteo? They're both still running and growing.
They are.
Okay, excellent.
They are.
Isn't there a slide before this one? Did you skip that? Okay, maybe it doesn't really.
I kind of changed a little bit, kind of the flow of our.
Okay, good. Sorry for that. It's all. So now, when we now look into the program in itself and talk about like how does it actually work? What is required? Like what is the flow of the program? And when you look at that from an investor side, we basically have kind of, you can think about that as two sections. The first one is what we call a pre-program. This is mostly education, where we have like this one, educational events. There are presentations, conversations about background, talking about angel investment per se, so as we do today, but then also cover areas like MVP. We heard these acronyms today, MVP and product market fit and things like that. So we talk about that. We talk about startup finances. So there's a comprehensive education program that brings the startup world closer to you, because you have to keep in mind that a lot of new investors don't necessarily come from a startup background. Some of them do. Most of them actually come from a corporate background that might not be as familiar with the startup space and how startups operate. And we believe that we have to kind of deliver that education first before you actually are before you feel comfortable in making an investment decision into a startup. So the better you know the startup space all up, the more comfortable you are to make a decision. And you're also making a better decision the more you learn and have learned about the startup space. So that is the pre-program. And then the experience itself is a comprehensive kind of 3 months program with meetings, I think every other week right now, where we go through a very structured approach. John is running a really tight here, where it's a repeatable motion that John has developed over the years, where we come in basically a mixture between the group typically is a mixture between newbie investors, so the ones that are doing it the first time, and investors that have already made some investments, already also ran through the program. So when you join the program, you will see that there are a bunch of new investors, and there are a bunch of them that have already done it, like myself, Matteo, or Sophia, that are still going through the new cohorts and keep investing and keep doing the program. And then on the startup side, we are inviting a little bit more than 60 startups that we are looking at, right? You have the investors on the one side and the startups on the other side. And I will talk about the startups and that specific progress more in a second. So roughly 60 startups on the startup side. And to be fair, we have no kind of conditions there that say you have to be in a certain industry or you have to be in a certain state. We will select you out, so we will clean the space, but initially we have a very kind of wide funnel, if you will. Like we let a lot of startups in that we then on the investor side want to look at. Mentioned it's a very structured approach. I think I have. Do you guys can still hear me?
Yes.
Yep.
Now I got.
You're good.
Sorry. Let me. My headset stopped working. I have to. Let's see if I can. Otherwise, I just keep. Now it's better. I think this works now again. Sorry. And John has a structured approach that is working really, really well. It's very enjoyable. It's very democratic. So we're doing a lot of voting, right? Everybody has the same power. Every investor in the room has the same vote. We do a lot of conversations and discussions amongst ourselves and with the startups. So it's a learning experience that is very active. And lastly, we talked a little bit about due diligence and kind of how we are making the final selection. But before going there, actually in the process of selecting the startup that is the one that you want to see winning, what happens there is that you're building an investment thesis. What that means that throughout the process, what you're actually learning, beside many other things, you're learning what is important for you as an investor to invest into, or what is it that you look for in a startup. Do you look more for the team? Do you care about, do they have a product or not? Do you care about revenue? Do you care about the market? How big is the market? What kind of market? Do you care about, like, is it a B2C or B2B? Like, all of these kind of questions are relevant for you as an investor to make a decision at the end, and having an investment thesis where you can say, I actually understand about myself what I am interested in investing, which means you can look at a startup at any that somebody's presenting to you at any pitch and say, does that match my thesis or not? And either you change your thesis, or you can really fast, like, say, nope, not for me. That doesn't match my thesis at all. So that's kind of, we want investors to arrive at the point where they have an initial investment thesis, which obviously can develop also over time. And lastly, because it's a group exercise, we're also making the investment as a group, right? We are all pooling our funds, and we are making one investment together into one startup. And lastly, it's learning by doing. It's a lot of fun. It's a lot of action. It's a lot of conversation. Next slide, please. Now, when you look at that from the startup perspective, I said, well, there are 60 startups that come in, and we want to have one, right, that we're investing in at the end. So there's a program, a process here too, that we are going through. So just quick, every startup gets to pitch to us for 1 minute, right? All 60 pitch 1 minute. After that, we talk with them very briefly, but we mostly talk amongst ourselves. And then we are making a decision on who are the 24 that we want to invite next. And that means if you're invited to come back, you then get a chance as a startup to talk, have a 3-minute pitch and have more Q&A and more networking. So you can already tell that throughout the process, we on the investor side are spending more time with each of the startups that we want to learn more about, right? The first 60, quick. The next 24, we are already going a little bit deeper and trying to understand what they're up to, who they are, what the business is a little bit more. And then from the 24, we go to 12. So we cut the number of startups in half, and we are now giving them 10 minutes pitches where they come in, pitch for 10 minutes, and we have like all sorts of one-on-one conversations, more Q&A, more networking. So we are increasing again the time that we on the investor side are spending with the startup. After those 12, we are selecting 6 startups that we call our finalists. And on these 6 finalists, we do due diligence. So we are spending time with, even more time with the startups. We are spending time with customers of the startups. We are spending time with existing investors of these startups. We are spending time with advisors to the startup. We are looking for industry experts. So we're going deep into the space where these 6 startups operate to understand how viable are these businesses, right? How promising, how viable are they really? So we dig deep to understand where are the problems, where are the opportunities, mostly actually where are the problems. Because we, at the end of the day, we want to make a recommendation to the investors. So the due diligence teams need to make a recommendation to the investors. Is that an investable startup or not? And typically, John can talk about the numbers a little bit more. We would say between 3 and 4 out of the 6 are typically investable, where we could say, yeah, those are actually investable businesses. And now it's up to the investors to make a final choice. Who do we want to invest our money in? One last comment here, and then we can move to the next slide, is if here are any startups in the room, what I personally believe is super important is to recognize that and understand that process. Because when you're going through the steps of the process, your main goal is more, specifically initially in the process, is to get to the next step, right? So if you only can pitch for 1 minute, your goal is to get to the next step so you can pitch 3 minutes. And when you pitch 3 minutes and you're in that step, your goal is to get to the next step. So think about it step by step. Don't overthink it. It's like you really need to kind of win us over with the time that you have. We will cut you off after 1 minute. So if you don't land your 1 minute pitch, you basically are out already in the very early stage of the program. I think we didn't talk too much about funds. Let me just quickly say that. We typically invest between $100,000 and $200,000 it depends on how many investors are participating in that cohort. Right? So we can talk about the program details a little bit more, but we currently it's a $5,000 investment per investor, and depending on how many you have, right? If you have 20, it's 100K. If you have 40, it's 200K, and everything in between. Next slide, please, Sophia. I think this is something where, Matteo, are you taking this over from me here on?
No, I think my slides are like after. I don't know if it's after this one because like Sophia changed the photo.
I can touch a base.
Well, the one I would
one.
suggest that the person who was a lead investor should talk about that, and I haven't been, so that's why I'm like.
Yeah, I'd like to add to this that the outcome of each program is not just for the angel investors to learn and for the startups to get the funding, but also it is a good opportunity to become a lead investor and to become a fund manager, and to be able to actually build what we call the special purpose vehicle, which is just another type of fund and form of investment for the group of angels that are participating in the program. So again, it's not just about building angel investors or raising the funds for the startup. It's also about building leaders. And it is important to do that. It is important to grow out of the status of an angel investor, because further on, remember what we were talking about at the beginning of this session when we said that angel investors and startups add to the economy. Lead investors contribute to the economy. They can further on create their own angel network or build a venture capital, or have become part of maybe become a board advisor for a startup. So it is important to outgrow of the angel investor status. And I am very fortunate that, now it's going to be the Transatlantic Fifth Conference is going to be my third event. In the first event, I was just learning. In the second event, I led a due diligence team. And in the third one, now I'm an angel investor lead. So I feel like I'm growing into this, and just sharing personally, I do intend in the future to build my own fund. So just food for thought on the fact that this is not just an opportunity to diversify your investment portfolio. It can be a career path for those who are willing to go beyond, just investing in startups. And that was something that I wanted to share. And, just sharing a little bit that, each of us who became a lead investor was to start with an angel investor. And you can find Matteo, who was a participant here in Transatlantic One and became a lead investor in the second one. A lot of us here that are I participated. I started in TAC 3 and I became a lead investor here. And we can talk more about what are the paths of all these people now. But just to say that there is opportunity for growth professionally as well. I would like Matteo to share. I think Matteo, this is your part, and we'll get back to more details on how to register with the Transatlantic Angel Conference. But Matteo, I think these are your thoughts here.
Yes, absolutely. Happy to share more about my experience as lead investor. First of all, confirming everything that you've said, Sophia, meaning that for me, it has been the thought process behind it was that it was a growth process, like learning and growing into the role and into the mission of being a lead investor. So after participating in TAC 1 as a participant, as an angel investor, I decided to take on the role as lead investor, mostly to build the learning blocks on top of my first experience. And here in the first slide, I basically listed what are the main tasks of a lead investor. Before I jump into those, or before I describe them, on the left side, I want to make sure about this difference, because lead investor might be a misleading term, like in the context of TAC. That's why I put it in parentheses in the title. Lead investor is usually the person who leads the funding round, for the company that they're invested in. So coordinates with all the other investors, whether like VCs or other angels, individual investor, In this case, by lead investor, as John mentioned earlier, and you too, Sophia, is the SPV organizer. So is the lead among peers within the TAC or SIA program, right? So he's the one, moving to the right-hand side, who negotiates the deal terms. So as, based on the process that Cyril was describing, as the final vote approaches, so when you're in the finalist stage, the lead investor starts understanding what are the deal terms, and what are the terms of the investment that will be negotiated. At this point in the life of a startup, there's not a lot of complexity. There's not a lot of structure. It is pretty straightforward. It's usually like the first check or checks that the company's getting beyond family and friends and fools. And so the terms are not particularly complicated. However, it took me a little bit of time between books and podcasts and articles to learn about those, just to understand what were the main terms. And they usually break down into economic terms and control terms. I won't get into the details, but it was definitely something that I wasn't familiar with, and I had to learn in order to have a effective conversation with the founders. The second point is that the lead investor builds relationship with the founders. I kind of already mentioned this a few seconds ago, but the point is that as the final vote approaches, the lead investor is the one who creates those relationships and fosters the relationship with the founding teams before the final vote is cast. And then after the final vote is the one who nurtures that relationship with the winning team. So it doesn't stop at the vote, at the investment, but it's hopefully a multi-year-long relationship with the founder. So it is really, really important to build that rapport over the course of the final days or weeks of the program, but more importantly after then. So just to make a practical example, just to give a practical example, I am in close contact with the winner of TAC2, the Ukrainian company, and we tend to have quarterly updates from the founding team, so that we are up to date with what is going on. And moving on to the third bullet on this slide, try to help as much as possible. So the lead investor is basically the connection between the company and the rest of the investors in the program. As you can imagine, it's not sustainable nor feasible to have 20 plus investors constantly reaching out and talking to the founders. That would be a distraction for them. So the lead investor is the conduit, is the liaison, as I wrote here, between the two groups, with the idea not only to provide updates to the investors, but also leverage their expertise and their network wherever is needed by the company. So if the startup is looking for sales leads, maybe some people have some sort of network to tap into to then provide at least the initial conversations to the startups. If there's a lawyer that needs that can provide legal advice in the context of what the company is doing. So again, it is hopefully multi-year long relationship, and it's kind of a win-win scenario. The success of the company is dependent on how much investors put in, and so they are incentivized to kind of continually support the companies, and the lead investor is the one that manages this flow of information and resources. Next slide. So I add another slide to basically share what were my biggest takeaways as a lead investor, but I think this is also helpful for founders to hear and to kind of think about in their journey as entrepreneurs. The first one is focus on what matters. As I mentioned earlier, there's a lot of economic and control terms that could go into negotiation, but at this stage, everything should be pretty straightforward. If there's a lot of complication around the terms that specifically the founders or the entrepreneurs want to put forward, there's something that maybe is underlying that, meaning that if there's too much complication, the lead investor and the rest of the investors should be a little bit wary of that. So it is in the best interest for the company and for the investors for the agreement and the investment to be pretty straightforward. So focus on the real important things. The second one, again, personal experience, that practice is a lot better than theory. You can read and listen and watch all you want about how to invest, but it isn't until when you are having these conversations with the founders, that you learn what goes into that. And it's kind of like a dance. It's a back and forth, not just in terms of negotiation, but like in understanding what are the real motives and what are the real goals and objectives for each part. And obviously the goal is to meet in the middle. One thing that it was really interesting for me to learn is that we tend to focus a lot on like what is happening now, but it is really important to have like to look into the future. So from the time of the investment to usually the next funding round, which is after 18 or 24 months, what are the milestones that need to be hit for the company basically to succeed? And as a consequence, based on that timeline, how does that inform the present assumptions and how that company can grow until the next milestone? And the last thing that I'll say is that sure, we are as a group a close community of investors into that company, but we're not the only one. We're not the only one providing the dollar, the money, and the brain capital. There are other stakeholders or investors sitting at the table. So it's been an interesting work for me to connect with that an investor to understand what is their investment thesis, how they're planning to support the companies in the years to come, and how we can all kind of like collaborate together in order to, as I said, make this win-win type of relationship where when the company win, we win, and vice versa.
Thank you, Matteo. And with that, we're gonna get towards the end of our slides, but we'll leave it open for questions. If you are interested to be part of this program, you have a QR code that you can scan as an investor. Like if you want to be part of this as an investor, you can sign up using the form. We are sharing this with you. Now, something that I would like to share is that being an angel investor requires time. You're not just investing money, you're investing your time and you're investing your skills, and you're bringing a lot of value. And it means that you need to have a certain availability for that. We talked about earlier that we have like weekly meetings. So obviously, we understand if once here or there, like it's maybe there's a conflict in the calendar or something, but this is something that we need to be very transparent. It is a time investment. It's a learning program, right? So you need to spend time on it if you want to get the results of it. It is a virtual event for the most part. We have local gatherings as Ashgig, and as it was mentioned earlier, in some of the cities where we are present and where we have a bigger footprint. We start on March 14th and it should last until end of May. And it's gonna, like, we're taking registrations starting with now and until very close to the beginning of the event. Also, I think one thing that we didn't touch base is that our investment ticket is of $5,000 per investor. And to that, there is a fee to be part of the program of around $1,000. And John may correct me if I'm wrong on this. But yes, so the fee to be part of this, which covers like the costs for organizing all of this and the various resources that we're leveraging, like AngelList is one of the platforms that we're going to be using for our program. You will learn also that there are tools, online tools for angel investors, and obviously there's an associated cost with all of that. I'm not going to get into any of the details, but for the most part, we are just a group of angel investors. We're not doing this for profit. We're doing this to develop the community. And the $5,000 would be for the startup that would be designated as a winner. And so you multiply that by the number of investors, and that's how big the check it's going to be for the startup. If you're a startup, this is the QR code for registration. And I will leave it on here for a bit for those who are interested to maybe even share it with friends and family. If there are people who might be interested in your circles, feel free to leverage this. And then upcoming events are going to be here, listed here on this QR code. And I'll leave it here on for a bit. I think I would like, thank you, Matteo, for sharing your learnings. I would like, Cyril, maybe if you want to share kind of your top learnings from being part of the program for so many times, and then I'll add some flavor to it, and then maybe we can open it up for questions and comments from the audience.
Yeah, thank you. I think that there are kind of two aspects that I took away from the kind of the first sessions, so the Seattle Angel Conference sessions. And one of that is mostly around, and I thought I was becoming a better worker or a better executive at Microsoft at that time. So the things I learned throughout the program, they were obviously focused on angel investment, but they also were so deeply connected to think about startups and how they pitch and what do they do and what do they care about and what is important and what is not. So when you when you dig deep into the startup space, you suddenly get a totally different perspective in your normal work every day, because it tells you about what are the questions to ask to get to a specific or better outcome, let's say of a new project. Somebody internally is suggesting a new thing to do, and you can put on your angel investor hat and say, okay, let me look into this. What do they really want to do? Where is the market for that? How far are they? What kind of signal do they have? What kind of, like, all the questions we are asking the startups, you can ask internally. And I thought that was super impressive for me to kind of go back to like the large software company I was working for at that time and bring in that kind of mindset from an investor perspective into my daily life. The second part that I want to point out that I thought was especially valuable for me coming out of the program is the network of other investors, like the people that I was working with, because we were spending so much time together. And to be fair, in Seattle, it was pre-COVID, so we did a lot of in-person meetings. But the connections you were building with these others, right, the other investors, they are incredibly strong. I still, when I go back to Seattle, I meet with them, because half of them are friends, half of them are now like people I want to work with or I want to do future investments with. And I think that that strong kind of group of, or the connecting tissue of making an investment together where you are discussing a lot and you are arguing a lot because you don't have the same opinions, that binds you together as a group. And that I think is really strong.
Thank you, Cyril. And on my end, I would add that I found it, I mean, I totally can echo what was mentioned previously. I can add that I found it very interesting to observe the dynamic among the investors, especially in the due diligence phase. People are real, and even if some of these meetings are virtual, you get to know people's personality when we talk about how we want to spend our money and what we believe in and what's the purpose that we want to serve and how do we make this investment meaningful. And I think it's a beautiful human journey, I would say, to learn about what other people care. And it's also interesting to see just the group dynamic and what can be your strategy to persuade your group of investors. Because remember, we debate, we vote, but at the end of the day, it's just one startup that will get that check. And so as an investor, not only you will advocate for your cause and the startup that maybe you prefer, but you're going to be the one challenging other startups as well. And it requires soft skills, right? It's not it's not always analytical. It requires persuasion skills, it requires analytical skills, and it's a good practice of those skills in case, even in your professional life, you want to do that and to practice that. And at times it requires to acknowledge and to accept disagreement. At times my thesis might not match with another person's thesis, and it may not match with the winning startup, business in itself. But the idea is, what do you do with that? And what are you learning out of that? Maybe one of the startups that won the check is not in my area of expertise. So then how do I still help them? What am I still learning out of that opportunity, right? I think it's an interesting growth and learning opportunity, regardless of whether as an angel investor, you were in agreement with the group decision or not. At some point, you have to get the best out of it. And I think that's where it matches kind of what entrepreneurs have in their personality. Like, you're going to make the best out of what you have, and, you know, try to create value and out of that, and try to add to the economy overall. And I think another great takeaway and thing that I'm grateful for is the very interesting people that I got to meet through this program, including the investors, other investors that got to work in the companies, and sometimes the ability to create synergies between a company that is in the program and someone that I know just totally randomly from a different circle, or being that glue might be key for a startup sometimes, and it should not be under evaluated. So if you have a good network of people of different backgrounds, you might have a good fertile ground to become a good angel investor, because a lot of the times we're just the connectors, and actually that makes things happen. So yes, I think I'll stop here. I see the time going by, and we have normally 20 more minutes, which I would like to leave for the audience to bring some questions and maybe comments, and give us some feedback about what you heard today, whether you think it's interesting. And I'd like to thank Ashkik also for helping us with organizing this. Thank you. So you can raise your hand, or maybe we can look through some of the comments in the chat and take it from there.
Thank you so much, Sofia. This was great. And Cyril, Matteo, there was a lot of information shared, very structured, really good work there. I do encourage everyone to turn on your cameras and let us have a bit of conversation here and dive into some of the questions that you might have. It really helps. Thanks, Stephen, for taking the lead here with your camera. Okay, we have a silent room. Do we have any questions coming up, or should we wrap up early today?
Maybe
yes, hi, it's Mark. Just thank you very much for this nice presentation. I'm definitely curious to see what it would take to be a startup investor and to go through the vetting process. Sounds like a really exciting journey. I noticed on the webpage something called Demo Day. Can you say anything about that?
So that is, remember, in that experience path that Cyril shared earlier, that is the last step, where basically the 6 finalists for which we did due diligence get to actually either demo their product or do their final pitch. And that's basically the final day when we're making the decision on who would be the winner for the check.
The important part of that meeting is, in that moment, we open up to the public. So others, like venture capitalists, other angel investors, your friends and family, they can also participate in that event. Traditionally, that was in front of a live audience, like with like a full seated audience. Everybody could do their last pitch, and now we do a virtual event, and it's the last time the startups pitch, but not just to us investors, but to the public audience. And then after the pitches, the investor group goes in a private setting, and we are making our final decision. And then we are going out to the public again and saying, here's the winner. And traditionally, we would give them a big check. This time we do that virtually, where we are giving them the big check.
Oh, thank you very much. Yeah, that's how I imagined it. Yeah, and I'll reach out to you, Cyril, for more information for sure.
Anytime. Yeah.
Thank you. Maybe another thing that I would mention as a difference, though, as an investor between US and Europe. In Europe, you do not need to have like an approval of your status as an investor. There's not a barrier, let's say, that you need to comply with. In the States, in order to be an angel investor with our group, we are looking into accredited investors. And so there are more details about what that status means. Roughly, it's about either being able to provide financial advisory through like FINRA 65 or things like that. But also it could be tied to your net worth or annual revenue. So net worth of over $1 million and net worth over $200,000, like just in a nutshell of what this is about. In Europe, there's more flexibility. You don't need to comply with this. And I think it's a great opportunity for Europeans to play in this space. Thanks to that.
I had a question about that actually. How long is the process in the US to get the accreditation to be an angel investor?
So if you're not in line with the requirements related to net worth or annual revenue, then you would need to look into FINRA 65, Series 65, or I think Series 7. And then that is a process on its own. I think it shouldn't take more than a couple of weeks to learn and to have that exam. But then I think there are some restrictions related to the fact that you'd need to be actually a commercial entity. So that is something more kind of particular on a case-by-case situation.
So for 99% of angel investors, they either are wealthy enough by their net worth and they sign a piece of paper and go check, or they're wealthy enough by their income and they sign a piece of paper. And so it takes about 30 seconds to sign the piece of paper and then you are accredited. So it's self-disclosure for most people. If you're a member of Meta and Meta's median income is 300K, then you are accredited.
Got it. Thank you.
Any other thoughts?
I see Mara here. Mara, thank you so much for joining. And Ermelinda, thanks also for being here. I'm pointing out to the two of you since you have been quite engaged with the program on the outskirts and also interested in joining. I do wonder whether or not this helped or if this created more questions for you.
Hi there. I think you can hear me now.
Yep.
Yes.
Hi, it was wonderful. Thank you so much. I think it made everything much more clear and also more context around everything, right? So the examples and the experience shared was definitely great to hear. So thank you so much.
My pleasure. Thank you. Thank you for joining today.
So one of the things that we run in Seattle is a fund manager peer learning group for the investors that have gotten so excited that they decide to professionalize. And so we run a program to sort of build vocabulary for people who are going to do fund management of one kind or another. We have an example of that with First Row Partners, is a very active early micro VC in Seattle, where both of the partners are alumni of our program and did what Sophia is about to do, they've done as a part of SAC. And Flying Fish Ventures is also a Series A angel or venture fund that the partners are members of. So some small percentage of our alumni go on to professionalize. And so if you're interested in that journey, I'm happy to talk about that as well.
And we will have more events coming up. We actually have a series of them. I will be on one next at the beginning of March. So keep an eye on our LinkedIn posts and the calendar that we will share. Definitely, we're excited to build momentum and to raise more interest prior to launching the program. And so we're looking to fill our spots for the upcoming class starting on March 14th. If you want to, follow us and join us for the next ones, we'll try to diversify the themes that we're going to address. And hopefully it's going to be one of your first steps into angel investing to learn at least about what this is about. And you can decide afterwards if you want to pursue or not, but it's good that you have awareness of it now. And so hopefully this was a well time spent for you tonight or this morning.
All right, it looks like that's it for today, unless Cyril, Matteo, you have any final notes here. I see Paulina here from TAG4. Hi, Paulina. Thanks for joining in. She's one of the alumni investors from the previous program. Matteo, Cyril, do you have any final notes? And we will be closing.
I don't, and I think Cyril had to leave. So I don't know if he's still in the room.
Thank you so much for being here. Again, Matteo, Sophia, that was great presentation. Thanks everyone for your time. Thank you, John. We'll leave you here and hopefully see you at the next event.
Thank you so much, everybody. Have a great rest of the week.
Have a nice day. Bye-bye.
Nice day.